We've gone from extreme fear to greed in less than a month's time. Now, here's the problem. Most traders see strength and they think it's time to chase. But when I'm looking under the hood at different indicators, Keltner Channels, RSI, other ones, they're all flashing the same warning signal. They're saying that we're overextended, we're likely to pull back here in the short term. See, the market is overbought and it's starting to roll over. So in this video, I'm going to show you exactly what I'm seeing. I'm going to show you where I see this pullback headed, and then more importantly, how I'm preparing to trade it. My name is Helene Markham, and for the past 10 years, I've worked in stock and option trading education, managing trade alert services for our members. My goal here is to help you become a more successful trader. If you haven't already, give a like, give a follow, subscribe, and let's go ahead and jump into the charts. Okay, guys, we're looking at the more recent price action for the S&P, and we can see, right, we have the Keltner channels on the screen. Here's this blue upper line is the upper Keltner channel. Whenever a stock, ETF, or index is trading above that level, it's considered overbought and likely to pull back in the short term. We've been trading above the upper Keltner channel for a few weeks. Now, this can often go on for longer than you and I think, but we are likely to pull back in the short term. That's what that Keltner channel is telling me, right? We're overbought, we're likely to pull back. And then similar thing here, looking at RSI, we're looking at that 5-day period for the RSI. Whenever RSI is above 70, we're considered overbought, likely to pull back in the short term. Now we saw RSI peak above 90 a couple trading days ago. That is absolutely through the roof, red hot. Tells me definitely to beware, take precautions when trading because we are likely, as I said, to pull back there. That's what those indicators are telling me. So the question becomes, how far are we actually going to pull back? And I think that there is a great example from this time last year that's giving me insights as to where I think the S&P is headed. As looking back a year ago, it's hard to believe it was a year ago, but we had the tariff tantrum correction. And as we can see, we're looking at the chart right now for the S&P from this time. During the correction, we see that bottom early April and then that V-shaped recovery trading higher. We are seeing a similar run right here in May where the S&P was in this overbought run, trading above the upper Keltner channels for a prolonged period of time. RSI was red hot, finally spiked above 90, and then we saw this pullback back into the Keltner channels before resuming the bull trend and making that next leg higher. So I'm looking at these candles to figure out how far back I think realistically we could be pulling back here in this current run. And so during this correction, we saw a pullback in the S&P of 3.3%. I think that's a reasonable amount to correct after a run like we've just had. And to put that into perspective, looking at our chart right now, if we were to pull back 3.3% from the peak, which was right around 71.50, that would put us at 69.11. So here I am, here's 69.11. If we were to pull back right now, like we did last year during similar market conditions, we would be pulling back into the Keltner channels just above that middle channel before really finding support and starting to trade higher into the next leg. And I think that's a reasonable pullback. 3.3% after a move like we just had is very reasonable and constructive in a bullish trend. Now, personally, I'm not going to wait until it makes it all the way back down to 69.11 before looking to enter into new bullish positions. But what I do want to see is I do want to see the S&P pull back into the Keltner channels, which is going to be below 70.21. And then after it pulls back, I want to see confirmation of a resumption of the bull trend. What does that mean? That means I want to see the S&P start to trade higher, right? That means it's bouncing off of a short-term low and starting to make that next leg higher. That's when I'm going to be getting really bullish about the S&P and really looking to put on more bullish positions broadly. The market is red hot overheated, and until I see a considerable pullback into the Keltner channels, into that buy zone, I'm personally not looking to enter into many long positions at this point. point. That's because the broader market and stocks are likely to pull back in the short term. And as a swing trader, I'm looking to be entering on the swing higher, not on the swing lower when it comes to my bullish positions. Now, if you want to follow along and be alerted as to exactly when the S&P is in that phase of resuming the bullish trend and when it looks ready to make that next leg higher, go ahead and subscribe and also sign up for our free weekly newsletter. I'll be sending out that information to members of our free weekly newsletter. The link is in the comments. There's a link in the bio as well, guys. What are your thoughts? Do you think that the S&P is going to be pulling back to that 69.11 level, or do you think that maybe that's too far down, or maybe do you think it's going to go lower than that? Let me know what your thoughts are in the comments. I want to know, where do you think the S&P is headed from here? But thank you guys so much for following along.